Welcome back to Cryptolytics, giving you a fresh take on crypto analytics. Today, I'm going to talk about why it's a good time to start DCAing back into the market if you've been sidelined for the last few months. That's not to say that it's the time to get all in again, but there's quite a few metrics that I can see now that are kind of flashing to me that are saying we have entered an accumulation zone. So a region where, sure, we'll probably track sideways for a while, but I feel like the biggest drops have come and gone. Maybe we do get another leg down, in my opinion, maybe down to 16.5, something like that as a possibility, but I still feel like that's part of the range. Now, I think that could just be a typical kind of stop loss hunt where 17.5 or somewhere around that region is like the bottom, and a lot of people have their stop losses in just below that. And so maybe we get like a big leg down to like 16.5 or thereabouts, which is basically where a lot of people will stop out and maybe sell the last time. We've got a lot of people in the market expecting huge drops down to 12K now. Overly, the sentiment is very bearish. And generally speaking, that's kind of when you start looking at getting on the other side of that. There aren't very many permabulls anymore, and it seems like a lot of people are talking about 13K, 12K region, just like how last cycle people were talking about Bitcoin going to 1,800, these sorts of crazy price levels, and it never did. It never really went down below 3,000 or so. So it's just one of these things where it's a really good idea to see where the general sentiment is in the market and kind of place yourself on the opposite side of that, just like when everyone was saying, hey, we're going to go to 100K because, you know, this influencer and that influencer is saying this. Well, what happened? You know, we topped out at 69K. So it's always good to look at what the general consensus is across, I guess you could say, maybe social media platforms or influencers and stuff like that. See what their general consensus is, because the market in general will be following this, like in terms of retail market. But then you have big players who they'll be accumulating in these times where everyone is super bearish, and they will be DCAing out and getting out of their large positions because they have a lot of money. If they just sold everything, they would move the market down, tear through the order book. Basically, they go into periods of accumulation, buying up when the prices are very low in order to not spike the market, and distribution when the prices are really high. They need to take their time to get out of the market, essentially, before prices tear down lower. So I'm going to cover and look at a few different metrics on the charts and at a few other websites today that to me are telling me it's time to start buying back into the market. And I'm going to try and explain why, and a few things here or there. Obviously, this is not financial advice. This is just for entertainment purposes. This is just what I'm doing now. I finally bought my first altcoin last night for the first time in months. It's been a long time since I've bought any spot crypto, but I bought some NIA last night, a bit of Solana, Bitcoin, and Ethereum. And, you know, I'm hoping for some small legs down, but I'm not expecting huge dips now at this stage. What I'm expecting is an accumulation range where we just go kind of track sideways, because if we've already had the capitulation event from the Terra Luna collapse, we've had the contagion effect take down Voyager, Celsius, and 3 Hours Capital, which created a lot of forced selling in the market. But they're done. You know, all those are done, and all the DeFi, you got Aave, you got Solon, you got all of these different MakerDAO, all of these different platforms in DeFi that have survived the capitulation, which means that DeFi has managed to somehow survive the bear market, and CeFi seems to have, well, uncollateralized loans hasn't quite done so well. But I feel like most of the forced selling of Bitcoin is kind of done, and at this stage I feel like it's just accumulation, and I'll give you a couple of the reasons why I believe that this is the case. So let's get into the video. Okay, so first I'm going to cover my favorite chart, the macro chart. And look at this. We have the Pi cycle bottom flag finally printed, and we have a new candle basically printed on the chart. So basically I've been looking at this indicator for quite some time, kind of waiting for it to flash up, and it's finally here. But I think one thing I should probably preface with the pi cycle bottom indicator is the makers of the indicator did kind of curve fit in order to make it work, because when they used the pi cycle top moving average combinations but in reverse, well, it was just a very lagging indicator. So what they've actually done is they've changed the equation in order to actually kind of make it fit, and that's called curve fitting, which is what I've had to do with the logarithmic regression bands, all that sort of stuff. So the problem with curve fitting is that means that you're fitting the curve or the data to anything in the past to kind of make it work. However, the problem with that, I suppose, is that like the market can change in the future. You know, future cycles aren't always going to be exactly the same. Like, we didn't actually get any blow off tops. We got rounded tops. You know, I mean, you could call maybe that semi blow off top, but we didn't get anything crazy like in 2018. So, you know, that is one thing, you know, that's different. We also have, you know, the macro factors that are different. There's a bunch of other things that are different this cycle that other cycles have never seen before. Although in 2018, there were some Fed related factors that played into this massive price cut, because around here is where Bitcoin was trying to find a floor. And then there were a few actually big events around this time, if you look back. And that was basically where the price was cut straight in half, essentially. And then we got that flag. So, you know, the kind of same sort of thing is happening now. One thing that I find quite curious about the whole hyperinflationary narrative and where we are with the CPI and everything like that is that we're a lot higher than what is being stated. And, you know, 9.1, I feel like some of that's a bit of a game, because when you look at something like, for example, Trueflation, and this is just a free indicator, and even there were rumblings that a lot of the 9.1 and all that, so all these sorts of things, that's all historical data. And, you know, when you look back on Trueflation, and this uses Chainlink and oracles to actually collect information and data. So I actually kind of believe this more than I believe what's being presented to the general public, because, I mean, can you believe everything you hear in the news? Like, can you believe everything you're being told? I mean, that could be part of manipulation. Who knows? That sounds a bit like a conspiracy theory, so let's not go down that rabbit hole. But, you know, when you look at Trueflation index, we're at 10.39. That's not even the worst it's been. The worst it's actually been was like 11.5, 11.57. That was back in March. So that was before the huge dumps in the market, absolutely huge. And this is year on year as well. So, you know, if we look at like where 9.1 was, where was that? 9.1, or like what we're, you know, what we're looking at the moment, these big steps up in Trueflation, that coincides with the market top, November 16. So where we are right now, it kind of did keep stepping back up, but where we are right now and what's being stated in the media, what's been stated by the Fed, is literally where our market, the crypto market, started tanking. I find that to be maybe incredibly coincidental, but I think that that's a pretty good sign, I suppose, because all the big money out there, Wall Street, all that sort of stuff, they'll be happy with what's going on, because, yeah, I think they're accumulating at the moment. So, you know, this is how they're being kept happy, I suppose, because the whole thing about the elections coming up in America is, yeah, like if they go too crazy with interest rates and all that sort of stuff, then that's not really very bullish on Wall Street and on big investors. But maybe that they already know about this stuff. Maybe they have access to this information. I mean, they've been around financial instruments, these institutions, for many, many years. Like, they know how to read this stuff. So they also know how to play the market. They know how to sit on the other side as retail. They know how to basically take all the money from retail, essentially. You know, that's why it's better to be a contrarian, because you can kind of see the other side. Like, and the other side is basically where the big money is, because in order to fill their orders, in order to accumulate all this sort of stuff, they want to accumulate lower prices. They want to accumulate when everyone is panicking and that's the whole thing behind the fear and greed index, and buying into fear and selling into greed. It's exactly what they do. So I find this pretty fascinating. And you also see here that Trueflation's actually been coming down since April. So it peaked out and it's actually been coming down. So it's dropped like over 1% since its actual peak, its all-time high, if you will. at least in recent history anyway, at least since this current cycle. So I kind of see this as a really positive sign. I see that, you know, sure, there'll probably be another 75 basis point or 100 basis point interest rate hike, but I feel like the reaction from the market after the last time this happened, there was a big fake out, big candle to the downside, created a bearish hidden divergence, and created a lot of setup for more downside. But you know, even I had a look at that and I was like, well, that's crazy. But there were a few other things that flashed up at the same time. I didn't actually take any action in the market at that particular time because I was waiting for confirmation. You always need to wait for things to develop a little bit before you start to take action. And I actually went long after that because I saw a few things that gave me indication that, yeah, we weren't actually going to keep heading down. That was just a massive fake out. So this to me is very bullish. The fact that it's coming down, but also the fact that where the market peaked out and the bear market started is where, you know, the current CPI inflation has been stated. So it's very lagging. They're giving us lagging data. They're giving us massively lagging data, like more than 6 months of lag here. I mean, that gives big institutions plenty of time to accumulate, right? So, you know, that's going to keep them happy. So looking back on this and just, you know, continue on with the pi cycle bottom. Yeah, like the factors are different. You know, this time is different because there are a lot of other macro factors and stuff like that. But I'm just seeing this and I'm just like, it's time for me to start accumulating again this is not the only indicator that's telling me it's time to accumulate. This is definitely a big one, but to be honest, this is just this is my confirmation that, hey, like now it's time, right? So for me, I've got the logarithmic regression band. This is my accumulation zone. So there's another strike. Another one here was my Elliott wave corrective pattern, actually called the bottom around actually 16,500. So we haven't quite got down there yet. So that's the bottom of the logarithmic regression band, but this does come up, you know, so maybe we just retest down the bottom here. And then, like, this does come up with time, but you can see that the Elliott wave corrective pattern from this last little move here is around 17K. So I'm getting a lot of confluence in this area, and falling bottoms very, very difficult. You know, we had support and resistance around this area. So this is just, there's a lot going on around here to act as support. We're in the undervalued zone on the risk index. You know, I've covered that in previous videos, so feel free to check on some older videos with regards to that. It's just a custom indicator, and you know, it's one of these indicators where in the long term, if you buy when things are undervalued and you sell when things are overvalued, historically you would have done very, very well. So again, just covering the pi cycle bottom again, because I covered that in a previous video from a couple of weeks ago before it was doing the rounds on every single crypto channel. Basically something I've been watching for a very long time, and basically, yeah, for me it's not necessarily a bottom indicator as much as it is a sign to start accumulating again, because yes, it called the bottom here perfectly, and yes, it called the 2015 bottom perfectly. We scroll back here, but yeah, also you can see we had another leg down, and that's something I also covered in the last video as well. So this could be our revisit to the 16.5k after a year of tracking sideways, basically. So, you know, is the complete bottom in? I don't think so necessarily. I feel like we're just in an accumulation zone, but I feel like there's so many different signs and indications telling us that I think big institutions will be starting to layer in now. And maybe I feel like a good comparison to the current cycle would be 2 cycles ago, where we had a double peak cycle. We had double pi cycle top, but let's not factor that in. But we had a double peak cycle in 2013, 2014. You know, I feel like maybe we could possibly do the same thing, where we come down, we cross the pi cycle bottom, and then things track sideways for quite a while. So, you know, I'm just DCAing in right now because I think we can still come down. But I feel like finally is a good time to be doing that, and I'm going to show the metrics as to why. So yeah, I feel like maybe we'll just track sideways for, you know, how long until we get to the next bottom, which was like 200 days. Yeah, 200 days. And yeah, like the other thing I'm looking at as well, which is just a bit of fun, and this is just pure speculation, so, you know, just don't take this for anything other than what it is, which is, yeah, again, pure speculation, is when I measure pi cycle tops to pi cycle bottoms in the Fibonacci extension tool, I find that it does very well at calling the kind of next tops. So obviously when you do it back in 2013 and 2015, that kind of range there, so you can see there's a dotted line there. This is a pretty kind of random number. It's not the 618, which is kind of what I really like to work off, but you can see that the 2.414 was the absolute top for the next market. That's a very kind of random number. I don't like it as much as the 618, but even if you bought into the pi cycle bottom and sold at the 618, which was here, I mean, you know, like that's about 1500%. It was a lot more if you held on. Purely, we're not talking about trading here. We're talking about pure price speculation. So let's move on from that. So basically, you can see if I measure the pi cycle top to the pi cycle bottom of the next cycle, which was the big old 2017 hype cycle where a lot of people got into crypto for the first time. For me, it was in 2015. But yeah, a lot of people were getting into crypto here, and this is where I sold and went on a few holidays and bought this camera that I'm looking at right now, and you know, just all the stuff that I wanted to do for the last year and a half, since I was doing pretty much nothing but put all my money into crypto. Yeah, that's when I kind of took my profit, and I'm very thankful I did that, because you know, this is kind of what happened. But the next cycle, when you measure from this pi cycle top to this pi cycle bottom, what did it do? It perfectly called the first top, which was the next pi cycle top, right? So what happens if we measure this pi cycle top to this pi cycle bottom? So let's just zoom right in and make sure that I've got the fibs lined up, because I think I just picked a random date. So let's see here. We've got the candle close here. I mean, maybe I should just go to the wick there. I did. That's where I had it measured before. I have had this on my chart for a while. You may have seen it in previous videos. So if I do that, and I kind of, maybe the current candle closes here, I guess this will have to be adjusted. And again, this is pure speculation. This is just for fun. Don't take this to the bank, but the 1.618 is sitting at around 145,000. Seen a few possible estimates of that. The other thing as well is the lengthened cycle 200-week ETA. I think that's not really on the cards anymore. That was based on lengthening cycles. Hey, there's a small chance that we are. Maybe the Fed pivots in September, and then for some reason we get something like this. You know, I mean, we don't really know what's going to happen. Again, like, I feel like anything is possible. But yeah, it still wouldn't get us up to the top of the range if you use like a bar pattern to like work out how long it would take us to get up there. But hey, it's still a possibility. I mean, there's no hopium here. I'm a realist. I'm not doing this. I'm not saying that this is going to happen, but look at past performance. Look at where price has been before. Look at crazy stuff that's happened in the past. But I feel like we're probably more so just going to track sideways for a while. Institutions, big players will build their positions and then just start to spam the order books with bids to drive retail in, and then pump price up, create cascading liquidations to the short side, or a squeeze, create massive price action to the upside. When that will happen, I'm not sure, but you know, things will have to kind of line up perfectly. I feel like we might even just be tracking kind of sideways until the halving. The next halving is a possibility. But I kind of like this, and you know, the longer that we go sideways and the longer we have this kind of accumulation going on for, and the longer it takes us to get to the top, the higher the top can be in terms of the logarithmic growth curves. So even if we come down to the second from the top, you know, for example, like here, because you know, logarithmic growth curves, they squeeze in and kind of change every cycle. But yeah, so you know, we might be looking at a move like up to here for the next halving. So maybe we get to the 2, or let's just say we stick to this 1.618. That's still pretty good. 145k. I mean, let's just have a look and measure that from where we are now for Bitcoin. That's 600%. I mean, that's crazy. You know, if you're a traditional investor, 600% in a couple of years, like that's still insane. So, you know, we're still early. Bitcoin is still an amazing investment. And hey, you know, maybe we wait for the Bitcoin dominance to start dropping after the price starts pumping, and then look at the altcoin season index and then see, hey, are we in altcoin season? We've seen this chart before, but this is the altcoin or Bitcoin season index. So this is pretty good. This kind of shows when, when it's altcoin season and kind of when it's Bitcoin season. And, at the moment it's definitely Bitcoin season, but hey, if we look at this, if Bitcoin starts pumping again and it starts to go and track sideways in accumulation zone, then this will start to go back up essentially. And then, hey, maybe we can flip into altcoins, which have a lot more upside potential. And that'll be where your fundamental analysis comes in, and the things you have high conviction in, that's when you start to get into those. So let's just have a quick look at some of the other things, like look into Bitcoin. This is a pretty good website. Highly recommend it. I quite like this for looking for accumulation ranges. Again, we can get stuck in these ranges for quite some time, but we've been in this range for a while now. So this one's just saying, hey, look, we're in accumulation zone. So it's time to start, accumulating again, I guess. But I've been waiting for other metrics and indications to start getting back in. The 200 week is okay, but I've got a better one that we'll look at in a second. But again, like we're below that. So, you could call that an accumulation range. Moving on, we have the Bitcoin price prediction tool, and it updates daily. So in the past, these bands have picked bottoms, which is really, really interesting. This is a newer chart on their platform, which has showed every time we've kind of reached the balance price, it's kind of, that's where we are, that's where the bottom is, I suppose. And maybe we don't quite make it to the balance price because this would be kind of curve fitting. That's how you build models like this, is use historical data. This kind of, to me, shows me that the price could still keep coming down. And this lines up with like the CVDD, which is the coin value days destroyed, right now is at 16,639, which lines up perfectly with the logarithmic regression or growth curve bottom as well. But if we have a look here, we just zoom in, we're very close. We're very close to the bottom. And, if we are just trapped in this kind of accumulation range where we go up and then we come back down, then we go up and down, and so on and so forth, then, maybe we do get a lower low, like a slight lower low, just to fake the market out, to think, hey, we're going down to 13K, and maybe it doesn't get there. I'm not really sure what's going to happen, but it's better just to play the market and play things as the data comes to us. Work with what the charts give us, work with what the metrics give us, rather than trying to make price predictions, because to be honest, price predictions, I mean, they're always proven wrong, right? So, but I just see this, and I just see this as a really good sign that, we are pretty much at a bottom. Could be another dip down further. So let's have a quick look at the lines. We've got where's the balanced price? The balanced price is sitting at currently 21,176, and we are below that right now. So balanced price is another good place where it's historically been good to start accumulating. We have the coin value days destroyed sitting at 16,639. And just to remind everyone, the coin days destroyed is a term used for Bitcoin to identify the value according to UTXOs. And there's more information. If you want to know more about how this is calculated, then definitely check this out. But it's a Willy Woo indicator, and the balance price is calculated by subtracting transferred price from realized price. And it was invented by Dave Puel, who also invented a few other pretty useful models also. So yeah, I just see this region as definitely a bottom area, and yeah, we could keep coming down, sure, and maybe we do get that leg down to 13K. Maybe everyone will be right, but were they last cycle? I don't think so. Let's have a quick look at the MVRV Z-score. So every time we're in a negative value, it's been typically a good time to accumulate. And again, let's not go all in now, but again, like these are good accumulation times. So if we have a look here, we can see we are in a negative value at the moment. We have been for a little bit of time now. Since June, we've been hitting all negative values, just kind of dipping into negative values, but you can see we got really low in 2018. We got into some like negative 0.35, I feel like was probably the lowest. 0.45, I guess it's very, very low. But again, yeah, this is another pretty good indicator that we have kind of reached bottom levels. I mean, yes, we did get to minus 0.2 on. I'm just going to zoom in here and see what the absolute lowest was, 0.25, right? And then in 2018, the lowest we got was 0.47, which is, yeah, very, very low. So maybe we do come down a little lower, you know, because we got to that initial range right here when the market cap was at 65 billion. And if we just zoom back out, you can see that we can probably come down a little more as a possibility. But, you know, when we were there at kind of that first level, that was kind of right here, just when we went down below the line. And then basically that last tiny little wick down is where we sort of started to reclaim and then track sideways. So maybe we get that dip, reclaim, and then track sideways. Maybe we do the same thing and then actually reach the very, very bottom of this as a possibility. But, you know, how far down will we go? We don't really know. Will we go down as low as what everyone is saying? I'm not so sure about that. The other thing as well is, you know, I've been waiting for capitulation, been posting this Newport since the start of the year, waiting for capitulation. We're finally here. We're like we got to minus 15% or thereabouts in the Newport. And typically this green zone here, the capitulation zone, good time to be buying. And we've been there for a while, don't get me wrong, since like June. So this is kind of lagging that I'm sort of talking about this, I suppose, but it's one of these things that if we do start forming like higher highs on here, then that's a good sign of recovery in terms of accumulation. Because you can see here, we did get down into this zone, so kind of where we are now, I suppose. We had this big wick down, and we haven't really had that, but we didn't exactly blow off top, so maybe we won't blow off bottom. Is that a thing? I don't know. But maybe we don't do that, and maybe we just kind of track sideways, but like we are forming higher lows. I mean, if we do get a little spike down and it doesn't form a lower low, maybe that's like, you know, the best sign. But you can see here, like at least we do go up, essentially. So we get the big spike down, and then we just kind of track sideways, and this goes up and comes back into the range before we go back up. You can see right here, that was where we crossed back into the line. So we've got that like that big wick back up, or that big price move back up to the upside. And here we went back up into the range before we even started making a price recovery. And I've been liking the comparison between this cycle and 2 cycles ago, because we had that double peak cycle, the double peaks, and then a move to the downside, capitulation down, and then basically a slow move back up, forming higher lows on this Newport. We're pretty fresh into this region, so we kind of got to wait for things to play out a little bit more. But again, this is, to me, is just like, yeah, I think it's a good time to be getting back into the market. The other thing I'm looking at the moment, and I've turned on a bunch of other divergences on this, but is the market Cipher. We got a buy indicator here when Bitcoin was sitting at, let's just see here, above where we are now, 20K, 20.3K essentially. You can see at the top there, the close of the candle was 20.850. So you can see up the top there, that's where I'm looking. Although it's moved around a bit. Oh, we're at 21 now. So that was the candle close, which signifies that this was the buyback in for Bitcoin. To me, that's a great sign. And the other thing I'm looking at as well is just on the oscillator down below. I've turned the RSI on and the hidden and normal divergences. And sorry about all this noise. I'll actually just clean this up so we can have a quick look at what I want to talk about here. So I just want to look at this oscillator, and I'm just going to leave the dots on here because, I mean, that kind of coincides. But this is the RSI divergence indicator on the market Cipher on the weekly chart for Bitcoin. So we're talking about huge time frame here. And you can see, like, we very rarely get into this green zone. And if I just zoom out to where that is the pandemic crash of 2020. So this is what we're looking at the moment, right? If you look at here, where the price is higher, so this is how a hidden bullish or bearish divergence works. We'll explain in the form of a bullish divergence. The price is higher on a correction. Price goes up, corrects back down, but then the RSI comes down further. So basically what it is it's a sign of oversold, essentially. So you've formed a higher low, essentially, compared to the last big low. So in this case, last time it was green. But basically what happens is, so you're forming a higher low, but the RSI is down significantly more. So that's a hidden bullish divergence. And divergences are amazing, to be honest, in terms of looking at trend continuation. And we're talking about this kind of massive amount of time, this huge time frame, well, like on the weekly, trend continuation is up. It's bullish because we have just constant growth. Basically, Bitcoin is in a perpetual bull market, just like the stock market. It's in a perpetual bull market, or it's in a massive growth trend, essentially. So no matter what, like you could say we're in bull or bear phases, but it is just a perpetual bull market in the long term. So if you have a look at this on the RSI, we just printed a hidden bullish divergence, which is trend continuation, which basically is here essentially. So you can see here we had a higher low on the RSI. So if I just zoom in, because usually it's zoomed out, we have a higher low compared to this wick here. And let's just go compared to the pandemic crash. And there's the RSI. So green, the fact that it's green means that that's like your buy zone, essentially. That's where it's starting to measure out for divergences. And we're also lower than we even were in 2018. So that to me is a hidden bullish divergence, because like right here to here, that's lower, but the price is higher. See, it's a higher low, again, higher low to this, and then we're starting to recover. So that's your hidden bullish divergence. And that's just basically a trend continuation pattern. And then if we have a look back, in terms of the stochastic RSI, again, sorry, this can get a little bit messy, so I'll just isolate it to most recent price action, where we had a sell here. We had a bearish divergence on the stochastic RSI, which is measuring from here to here. I wouldn't call it very strong, but I guess you could if you wanted to. We just have a buy on the wave trend, and to me, I really like this wave trend, and I've been using it a lot for day trading and doing stuff like that. Also used it to get back into SALT, on the weekly chart, and I did a video on that, so please check out my other videos if you want to see that swing trading strategy. But yeah, that was how I started getting back into SALT. I didn't actually buy immediately on the dot. I just went down into the lower time frames and worked out where I wanted to buy, and bought well below where the dot was printed on Solana. But again, this is just, to me, very bullish. This is a buyback. We might get a print like this, where we track sideways and it goes red again, and then maybe it goes green. But I think the worst of the selling is kind of behind us. So I feel like, there's that. The other thing as well I want to draw attention to is there's two very kind of basic things, but these lines here, so let me just turn the market cipher off. These lines here are smoothed moving averages. This is actually the TMA, which is the moving average. Great channel for day trading. Highly recommend it. This is the TMA Overlay, which uses smoothed moving averages in order to cut out a lot of the noise. You can see that actually they were very well respected. So, when we first started coming down from that top, with this bearish engulfing candle here, or 3-line strike. So we had 3 candles to the upside and a massive bearish candle to the downside to indicate the beginning of the reversal trend, essentially on the weekly. You see how it worked out perfectly. I mean, if you sold there and you were waiting until now, or even if you waited for the next 3-line strike, which was here, well, I mean, you didn't have another 3-line strike to get out, but even from here to the next, because you could call this consolidation, because when you're trading between moving averages, generally that's a consolidation period. So you can see we're still in consolidation period now, I'd say, but basically we hit the 21. So these moving averages are the 21, which is the white, the 50, which is the blue, the purple is the 100, and the 200 is the red. And when we're basically, this is color coded. So when you're above the 200, it's green, which is bullish. When you're below, it's red, which is bearish. But we're on the weekly, so I don't think we've ever seen on the weekly chart any bearish, any move to below the 200 smooth moving average, any close. We've got nothing, no, not a single close below the 200 smooth moving average. We did get a wick here. Look at that. We got a wick on the 200 smooth moving average. So we got bullish divergences on the RSI, which again is like very strong. We have a bounce off the 786 level, and that's measuring from the pandemic low through to the absolute top here. You can see the dotted line. That's where the Fibonacci is measured to and from. And basically, you can see that these levels were pretty well respected. We had a move here, wick, and then so sideways accumulation, move to the next moving average, sideways accumulation between these two ranges, and then sort of a breakout and a rejection with a big momentum candle to the downside, which is your rejection. That's pretty much a bearish engulfing candle. So that's basically like, okay, this range here, this attempt at a breakout, completely invalidated. You did get in here and you saw this bearish engulfing candle, you could call it. It's not really engulfing, but it is a high momentum move because that was a red candle too. Down to the next level, which we just blew past. We did not manage to get back inside of it. And then we wicked down to the 100, which we sort of tried to, we just kind of tracked sideways for a little bit, but then we had that massive contagion in the market. You know, we had 3 hours capital, we had, you know, all these other things happening at the same time, which just gave us that capitulation to the downside, and then broke past the 100, and then we've bounced off the 200. Smooth moving average. I mean, this is where we've found support. And this is, I feel like, where we will just range maybe here for some time. I guess this is going to keep coming up as well. And maybe we do get another wick to the downside, but maybe we just don't close the wick in it. I don't know. And then we just come back up into the range. I don't know what's going to happen. No one does. But yeah, right now, 17,771 is the 786. And we literally bounced off that. And we've entered this range. So that, to me, is pretty good. It's a sign that we've got strong support where we are now. So DCing into the market now, you've got a good amount of support around where you are. So even if we do like kind of wick back to the downside, we might just end up coming back into this range essentially. But yeah, in terms of just the standard moving averages, Bollinger Band, buy and sell zones, I mean, that's still, you know, we don't have a green flag just yet on this one, on the weekly. But, you know, that's okay. Like, we don't necessarily need that just yet. That's just kind of confirmation, right? That's just, we use that as confirmation that we are in the bull market finally once again, because yeah, this is quite lagging. This is just kind of a confirmation that, yep, okay, look, when we're red, we're in a bear market, and you just got to accept that. When we're green, you know, we're in a bull market, or at least an attempt to get back into the bull market, because, you know, this happened in 2019. But again, like, you know, it's just a nice little indicator. And for me, that will be, when I see this turn green again, I will be even more bullish than I am now. Yeah, I'm way more bullish now, essentially because of how bearish everyone is. So yeah, it's taken me quite some time to get to this point. But yeah, we got a pretty strong trend line here that's sitting at the moment about 25k. So I don't know if we'll get like a big run up to 25k yet, but you know, I feel like we at least will track sideways for some time. So yeah, that pretty much wraps it up. What I'm seeing on a macro level is very bullish. I'm obviously still doing my day trading, all this stuff on the side just to accumulate revenue in order to put food on the table. But at the end of the day, I still much prefer to buy spot and look at things in the long term, because that's probably, that's a proper investment mindset to have. You know, you've got, maybe you have your day trading, maybe you have your DeFi, but then you definitely need your spot and, you know, your long-term hodl bags, all that sort of stuff. So at the moment, I'm looking at starting to reaccumulate. Last time I bought spot was quite some time ago, because I've just been waiting for a lot of these things to kind of line up, because the market was showing a lot of bearish signs the whole time, ever since January, ever since even like December last year. And if you knew more about true-flation or inflation and all these other things, then you would have known back in December last year that was going to be the end, because as soon as true-flation peaked out at 9%, well, I feel like a lot of risk on was starting to de-risk and leave the market, and that was them pricing it in. Retail is finally starting to figure it all out, and I feel like a lot of that information is lagging, as I said at the start of the video. But that aside, just in terms of pure charts, metrics, on-chain stuff, I just feel like we're very close to the bottom, and I feel like we're in an accumulation zone now. Are all these charts and metrics and predictors perfect? No, they're definitely not. Are we at the absolute bottom? Have we hit the absolute bottom? I don't know. No one does. However, I feel like we're very close to it, and I feel like with all of these stars aligning, it's not just one thing. We have crazy amounts of confluence. We have so much telling us that we're very close to the bottom. Very close. And if you have a like multiple year time horizon, like several year time horizon, 2-3 years, the next Bitcoin halving, anything like this, then right now is perfect. So even if you drop down to like lower time frames and try and find somewhere to buy back into the market, or at least start to DCA in now, like you'll look back on this, I guarantee you, in 3 years time, and just be like, I'm glad I did that. Because sure, like maybe we go back down to 17, maybe we go down to 13, who knows, we don't know what's going to happen. I have my reservations against that, but I don't want to be proven wrong, so I'm not going to say it's not going to happen. But one thing I can say is that no matter what, you'll probably look back at these times where you're buying whatever it is that you love, like ADA, Cardano, Solana, Nia, Atom, whatever you like, I don't know. No matter what, I think that if you're sticking to solid projects, especially Bitcoin, especially Ethereum, especially with all this like hype around the merge, finally setting a date, I'll believe it when I see it, but that's happening, I guess. And all these other things like crazy bullish news on Polygon with their Disney partnership and all this other stuff that's going on, and some other really interesting new potential gem projects that you can see people like Sam Bankman-Fried investing in, which is one called Sui, which is not available for us to buy yet, but that's definitely one to watch. It's like 250,000 TPS. Just another crazy new blockchain, uses its own programming language, but we don't know much about that one just yet, but it's looking like it'd be very interesting. There's still things happening in this space. There's still so much bullish news and so much potential for growth. We're still early, so this kind of excites me. I'm looking at all of these key metrics. I'm looking at Bitcoin showing strength, even from bearish news, at least from retail. I feel like a lot of the interest rate hikes and all these other things at this stage will just be big spikes, the upside, downside, all these sorts of massive price moves that swap liquidity from the hands of people who don't really know what they're doing into people who really do, all the long-term investors. All these sorts of people will come out better for it in the long term. But obviously you got to feel bad for retail, but it seems like everyone's very bearish at the moment, and in my opinion too bearish. Just like when we were at 69k, everyone was too bullish, even I was too bullish. So anyway, if you like this video, if you found it helpful, then please leave a comment down below. Let me know what you liked about the video. Thumbs up if you liked it, thumbs down if you didn't. Either way, I'm happy. And just remember, none of this is financial advice. It's just for entertainment and educational purposes only. I'm just telling you what I'm doing, and what I'm doing is absolutely buying because I've been waiting for so long. And if you like this video, please feel free to check it back in future videos by hitting the bell notifications so you can see when more videos come out from me. And feel free to check out some of my older videos. I did a urgent market update last week, which talking about how bearish everything was, but then you saw how everything turned around, which to me is incredibly bullish. It's showing insane amount of strength, and actually price did exactly what I thought it would, where it came down and then basically came back up and then started bouncing between some key levels before actually going back up. I posted some charts on Twitter, so feel free to check those. There was a recent Solana price move that did exactly what I said it would, but that's just reading tea leaves, really. Like, it's always a complete fluke when you get TA completely perfect on that kind of time frame, because it was a 15-minute. Using the 15-minute, 5-minute, and the 1 hour to work out price action and key levels where we'd bounce around, and also support and resistance zones, trend lines, all that sort of stuff. So all the standard TA stuff. But yeah, like that's the sort of thing where you measure that up and then you can act upon it in that day, in that time, but you can't really use it necessarily to do perfect price predictions. But what I can say is everything else that I've discussed in the video today, they're all very solid, at least for a long-term time horizon. So that's everything. Hope you liked the video. Take care. All the best. This is Cryptolytics signing out. Have a good one.